Welcome back to the QX Financial Podcast. I'm Charity Allred, and here we have our CEO, Jonko Castroferto. So, starting off today, we want to talk about banking. So, Jonko, will you please tell us what exactly is the definition of banking?
For sure. So as you guys know, in the last couple of videos, we have been talking about this concept called infinite banking or becoming your own banker. So if you guys are in the social media space, which obviously you are because you're watching this, you probably have heard of it before, right? There's a lot of TikTokers and Instagram folks talking about the concept. So today I like to demystify some of the ideas, some of the words, and kind of really dive into what does it actually do for you, what it actually does for you, the concept, right? How it can help you. So let's start with the name, infinite banking or becoming your own banker. Let me be clear about something. You're not going to become a real bank in the traditional sense of the word. And I say this because there's so much confusion in social media when we use those words, banking or fractional banking. So you're not going to get a charter. You're not going to become a bank. We use those words because the objective here is to mimic a similar process that banks take as far as how they become profitable and how they issue bank loans. We're trying to mimic some of those qualities, and that's why we use the word banking. So the first thing you have to understand is that IBC or becoming your own banker concept is not a product. It's not something you buy off the shelf. It's a process. It's a way of doing things, right? That's what the IBC concept is all about. So be wary when they tell you that you're going to become an actual bank. You're not going to open a checking account. You're not going to work on a savings account. It doesn't work anything close to that as an actual bank. Again, what we're trying to do is mimic some of the properties that banks have using a different tools to do that, right? So that's really what the concept of infinite banking is. So now talking about banks, about real commercial banks, most of them function using a process called fractional banking, which is another area that is very, very misunderstood, especially in the Bitcoin space, in the how would you call it? I forgot the word, but yeah, well, all the coins that are out there, and they talk about how they want to, be the new currency and all that stuff. So they have a very deep misunderstanding of macroeconomics and how banks actually function. I'm not going to talk about that today. But there is a process that we call fractional banking. And that's the process that the banks take to create money. Banks create money through loans, right? Again, this isn't a macroeconomics class, so banks don't need your deposits to create loans, by the way. It's another misconception out there in the Bitcoin space. But anyway, putting that aside, banks create money by issuing loans. And those loans, as they get paid back to them with interest and principal, create a profit and also can generate additional loans. That's in a nutshell the way fractional banking does. So what happens with commercial banks is they do not create money in the sense of printing money, but they do multiply the quantity of money available in an economy based on the loans that they issue, right? And you're welcome to learn all about money creation. The Federal Reserve has of St. Louis has a great research paper on this that you can Google and find later. But the point is that the banks create money to via loans to consumers, and then consumers pay back the loan interest and principal, right? And those dollars allow the bank to issue even more loans and so on and so on. So that's the multiplier effect, as we call it, of money creation. So it's a very profitable process for the bank, right? So where do we fit in all of these? Well, what happens is that you guys are doing the same thing in your everyday budget. You have auto loans, you have credit card loans, you have all these liabilities in your budget. All we're trying to do is take those liabilities and convert them into assets just like banks do. You see, for the bank, your loan is not a liability like it is for you. It's an asset. Why? Because it's paying them an income. So all we're trying to do is cut the middleman out of the picture and make you the bank, so quote unquote. And by that I mean making you your source of financing instead of somebody else, right? That is the idea behind becoming your own banker, that you take all these liabilities in your budget and they become income generating assets for the long term, just like bank does. So if you guys remember about opportunity costs and wealth transfers, we're trying to recapture all those dollars that usually go to financial institutions and put that money back in your pocket and put that money back to work for you. So that's really the core of the infinite banking concept. Once again, you're not become a real bank. You're not going to be dealing with checking accounts or savings accounts. The idea is to mimic the money creation process in your personal economy. So you are the one profiting from those dollars instead of the financial institutions. And we're going to get to this series more detail into how that works and how does that mean and how you implement it. We're going to talk about that. But all we want to cover today is that you understand that you're not become an actual bank. All we're doing is mimicking what banks do, create a different accounting process for you in your personal finance, so you actually become, your activities become actually more profitable than otherwise would be the case. And Shadi is going to explain now, how does that work when it comes to somebody's budget?
Right. So when we think about fractional banking and you think about how banks work, when we go and we make a deposit into the bank, we are in essence lending the bank our money. When we see our monthly accounts, they show that our money is there, right? Well, at the same time that we see that we have money in our checking and savings accounts, the bank is leaving really only a fraction of that for their own reserves. And most of that is going back out into the public in the form of loans. So our money, the same dollar, is doing two different things at the same time. So how can we mimic this system and make it work for us so that our dollars are doing the same thing, but helping us out instead of the bank? So that's really what fractional banking for our purposes is all about, is how do we take these liabilities like your credit card or your auto loan, and how do we turn that into an asset for ourselves so that we're continually earning money on that instead of losing money in interest to the banks. So as we look at this and as we look at where this can be in our own financial plans and in our own budgeting system, that really kind of depends on the person, and it kind of depends on your own goals. So for me and myself, or myself and my family, we use our banking concept for our auto loan. And so when we go and we buy that car, we use our own banking system to purchase that auto loan. Now, that doesn't mean that I'm not going to have a loan. It doesn't mean that I'm not going to have interest. The big difference here is that that interest is being paid back to me, and the generation of additional income is coming back to me instead of going out to another financial institution. Now, at this point, people get a little bit confused. They're like, how is that even possible? You can do the same thing with a savings account, just put money away in a savings account. But really, when we think about it, if we have this money in a savings account and we pay for it in cash, that's typically the quote unquote best way to buy a car is to just use cash. Well, if we're doing that, we're not really compounding on that continually. As soon as that chunk of money leaves our account, it's gone forever. We've lost control of it. We have no ability to continue to compound on that same money. And so if we wanted to take the fractional banking system concept and apply it to that, then we would want to find another way to do this so that we can have that car loan and be able to pay ourselves back plus interest and continue to compound on that money as if it's never left, just like the banks do. The money is still in the savings account, but they're also lending it out in the form of car loans and credit cards and these other things. So in a real way, we can take these liabilities and we can make them into an asset by making that money work for us, by compounding that interest as if it never left the account. We'll get into how that works and what chassis we're using, those kinds of things, those details. We'll get into that a little bit later. I don't want you to get too confused. Just know the underlying concept of fractional banking And the fact that we can take the system and we can mimic it for our own purposes and we can make it work for us. And this is like one of the most groundbreaking things I personally had ever learned before. And I think you're going to like it too.
Exactly right. That is the key concept, guys, that whatever the capital you accumulate, you have control of that, right? But what happens in real life is that we earn all this money and then we give it away as a wealth transfer. We give it to, the landlords, the car loan, the, grocery stores, whatever. And we not only lose that capital, we also lose all the interest we could have earned on all that capital, right? Opportunity cost. We discussed that a couple of videos ago. So again, the core idea is to be able to do both, to be able to buy the things that we need when we need to, but yet remain able to earn interest on that very money for the rest of your life. Again, just like banks do, right? They control the capital. The more they multiply, the more things they do with it, the faster the money grows. So let me close with this. IBC is not an investment strategy. IBC is not a mutual fund. IBC is not, a real estate deal or whatever. It's not any of those things that some people are portraying out there in the social media marketplace. It is very, very important. IBC Become Your Own Banker is a lifestyle, it's an accounting mechanism, it's a way of cash flowing, it's a way of doing things, right? But it's not an investment per se. You will make a return on your money naturally, right? But it's not an investment as we define it in the financial services industry. Once again, it's a process, it's a method. It will be very profitable, very, very profitable in the mid to long term, but it's not an investment, right? So it's very important that you guys understand that distinction because people think that I can just, put my money and forget about it. No, it's a process. Is the more you use it, the more you understand it, the better it gets. It's not a set it and forget it type of thing. It's a, again, for the lack of a better word, it's a lifestyle, right? It's changing the way we understand the financial system and just approaching the problems that we have on financing and buying things and acquiring things, approaching in a very different way, completely different way. And that's sometimes that people struggle, but that's what we're here at QX Financial to help you, implement your plan if it makes sense for you. And then how do you make the most out of it? How to maximize its value. So that's it.
All right.
Go ahead.
Well, thanks for joining us today. I want to encourage you to like and subscribe if you got any value out of the content you heard today. And if you want to receive more content, that's the best way to do it. So thank you for joining us again. Thank you, Janko, for talking to us today. And we'll see you next time.
See you next time.